Why are you comfortable lending against Bitcoin to this degree, and how have regulators become comfortable with it?
Yeah, I appreciate the question and the opportunity to talk a little bit about Silvergate and what we do here. We've been banking the Bitcoin and broader cryptocurrency ecosystem since early 2014. So we've been doing this now for for several years. And when we first started, it was Bitcoin only. It was before Ethereum and all the other tokens. And as you're aware, Bitcoin is a digital bearer asset, and it trades 24 hours a day, 7 days a week around the world. And so that really gets to the heart of your question, which is when we're lending against Bitcoin, we take the private keys as collateral for our loan. We have possession of those keys, and we have the ability, if our borrower doesn't pay us back, or if we need to satisfy a margin deficiency, we can actually liquidate the Bitcoin, and we can sell it 24 hours a day, 7 days a week.
But
So it's
Alan,
actually so. Yeah, go ahead.
Bitcoin is so volatile, though. I mean, how does that work for you when one day it's $46,000 and the next day it's $38,000 in such a short amount of time within weeks? Does that create complications for you in terms of taking it as collateral?
Well, it certainly could, and that gets to some of the design features of our Send Leverage product. So we call the product Send Leverage. Send is actually an acronym, and it stands for the Silvergate Exchange Network, which is the 24/7 access to fiat banking rails that we provide to the digital currency industry. And we bank companies such as Coinbase and Square and and Gemini and Kraken and it's et cetera. And we enable them to move US dollars 24 hours a day, 7 days a week across our platform. And then that gets to the heart of our ability then to also sell Bitcoin quickly if we need to. Now, so far, we've been doing this lending now for a little over 2 years. We've not had to liquidate anybody's Bitcoin because of the fact that we start in a very over collateralized position. So someone has to pledge more Bitcoin to us than what we're willing to lend to them. So we build in some cushion up front.
So let's switch gears here and talk about Diem, because you guys had bought the assets when the project really started here by Facebook looked to sell. What does this mean for you and your push into stable coins? And does it mean that you'll be a much bigger player moving forward working with regulators?
Sure. Well, as to how big we'll be, that's all to be determined. Our goal isn't to be a specific size, but rather to help our customers solve the problems that they're trying to solve in this ecosystem. And a stablecoin, as you know, is meant to be. It's a tokenized dollar, so, and different from Bitcoin, which we were just discussing, which can be very volatile because its price is really set by market factors. It's really just supply and demand. Whereas with a stable coin, what we're trying to do is we're trying to keep the value of that token at a stable price. And in the case of a dollar-backed stable coin, it would be $1 would equal one Silvergate issued stablecoin token. Now, we currently bank all of the existing regulated stablecoin issuers in the United States. That would be Circle with their USDC token, as well as the Gemini dollar, the Pax dollar, and True USD. They all use our platform, the Silvergate Exchange Network, and our APIs to facilitate minting and burning of their stable coins. And what we're trying to do is bring it. So those existing stable coins, by the way, they're primarily used for DeFi, for cryptocurrency trading. What we're trying to do is bring a stablecoin into the market that would primarily be used for commerce and cross-border remittance. And the Diem protocol was purpose-built for payments, and that's why it was attractive for us. And we're excited to now own that technology and to bring a stablecoin to the market,
Right.
hopefully by the end of this year.